You can see the market took a little bit of a dip in the early hours of this morning. So on the Banter Bubbles chart over here, most of the coins are red on the day. But on today's show, we're going to talk about the decorrelation between Bitcoin and the stock market. I'm also going to give you a couple of trades around the Hong Kong narrative, which is going to be coming up. I have about 6 or 7 different trade setups for you over there. So make sure that you do stay tuned until the very, very end of the show. And let's get started. So have a look over here. You can see the correlation between Bitcoin and the stock market is starting to come out of sync over here. You're looking at a negative 7% difference already, or 7% difference whether you go from the up or the downside, meaning that the stock market has been moving up. As you can see over here in the white, the stock market's moved up. Bitcoin's been moving to the downside, and ultimately we'll be looking for some sort of reversion back to the mean into an equilibrium, meaning that there is a possibility that Bitcoin could push up from these levels before going through maybe a further correction. It's either going to be one or the other. Either Bitcoin has to come up or the stock market has to come down a lot more to catch up to Bitcoin. And yesterday, the stock market did sell off ever so slightly. We'll cover those levels in a moment. Here you have it, the stock market coming into the top of the expanding megaphone pattern, which I told you yesterday. I said I would not want to be somebody that's going to be going long into this region over here. There's a whole lot of resistance, and I would expect that most likely there's going to be a rejection. Now, it was rather impressive that Bitcoin held up as much as it did. I thought that off a move like this from the stock market, you could expect a much further sell-off from Bitcoin. That has not yet happened, but it could still potentially become the case. So it is something you need to be aware of. And now we need to watch this level. You can easily put in a very small trend line over here for the stock market. So kind of tracking that level over there. I'll make it a bit bigger so you can see nicely. So you can see the dotted line. Once this level gets lost and it looks like it's just about to happen, then you can say that the stock market is most likely going to start to accelerate towards the downside. And remember what I said yesterday, the aim was that we were targeting down towards the 0.75 level of the broader range, which from a price standpoint is coming in around that 40 level for the stock market. What does that look like as a percentage drawdown still from here? Well, potentially it could be another 2.7% for the stock market. And I think that it would be very interesting to see crypto withstand that much of a sell-off on the S&P 500. So we are watching that, and the 𝗕𝗏𝗁 letter outlines some interesting things over here. He says that today is the first day that stocks are actually reacting to the whole debt ceiling crisis. The S&P 500 erased nearly $400 billion in market cap in the last 4 hours of the day. When the stock market begins to react to a crisis, then you know that something is wrong. The debt ceiling issue is coming down to the final minute, and taxpayers will end up paying for it. So let's see. I think they have until the 1st, which is just a couple of days left. That's 6 more days, and then some sort of decision needs to be made about whether they're going to raise that debt ceiling, which from a probability standpoint is more than likely probable that they are going to raise the debt ceiling, and the US is not going to default. But it's never a guarantee. There's always the slight possibility that it could go the other way. So we'll keep a close eye on that. The market is definitely pricing in fear around that whole scenario. Now, Bitcoin over here on the 4-day chart, you can see, again, we're coming down towards the purple moving average, which is our long-term one. And I did tell you guys that as long as it holds that level, that is an opportunity to potentially go long. A break below that at 25,810, any closing candles on the 12-hour chart below that level would most likely lead to a major sell-off, and that could send prices down all the way to that $21,000 to $23,000 level. We'll look at the low time frames in a moment. So there is an overhang that's still in the market, and 𝗕𝗏𝗄 has been outlining it over here. He says that the consistent grind higher continues. The grind high he's talking about is the ETH to BTC chart. He says every day that passes without the GOX or the government sales occurring continues to concentrate the 3 billion of supply into a smaller and smaller time window. It's a pretty brutal dynamic for Bitcoin that makes it really hard to allocate to it until this supply has been absorbed by the market. So remember, there's those Mt. Gox coins, which they said are going to hit the market at some point during the year, as well as the US government, which is also holding a massive amount of the Bitcoin supply. And they're also looking to sell that into 3 different parts over the course of this year. And time is running out, right? So if it's going to happen this year, we're already approaching June. That means over the next 6 months, there should be some of these coins that are going to hit the market. That is at least if they're telling the truth and they're not going to change their mind on that. And he says here, again, this is just to elaborate on that. Every day that passes without the government selling BTC concentrates the eventual selling into a shorter and shorter time period, because they have to sell all of that before the end of the year. At current, they have to sell approximately it's $1.1 billion in 230 days, which equates to $5 million a day. Paired with GOX, it's about 10 million in daily volume that they'll be selling, equivalent to another 50% of miner sell pressure for the remainder of the year. The reverse halving, so inverse halving effect that's taking place over here. And then Fuba responds to that, and he says that how do we know that they haven't already started TWAPing it already, so selling it into the market, he's saying. And 𝗕𝗏𝗄 says that none of the coins have been moved. We track them all on chain. Also have heard anecdotally that the government does not have the ability to access lending agreements to sell the coins before moving them, hence why they moved the coins the last time to Coinbase before selling. So basically, they can't really do a whole OTC deal through some sort of lending program. They basically have to move the coins to sell the coins, and therefore you'll be able to watch for that movement. And if those coins sell, there is a possibility, obviously, that is going to add, well, it's not a possibility, it's a guarantee, it's going to add immense selling pressure into the market. And that, paired with a stock market which is obviously declining, would not be a good thing for crypto. Then you can possibly breach the lows, but we'll cover that on another day when it becomes more relevant. It's not too important yet. It's just something you need to keep in the back of your mind's eye over the coming months. Then we also have the DXY, the DXY, the dollar index, which is currently sitting right at 103.4. That was our exact target that we had been looking at ever since it was down at these levels around 101.3. We got the move. Now we need to see the reaction from here. Yes, they had pushed a little bit higher. Watch the consolidation over here. Wait for it to either pull back or break through this level. If it does start to break through this level, your next target is going to be all the way up at T2, 105.79. If it sets in a lower high over here, then you can say, well, most likely it's going to trend all the way back down towards the lows. Will you get a triple bottom? I doubt it. If the dollar does come back down to this level at 100.81, you can expect it's more than likely going to break that level, and it's going to go much lower. You're going to make a new swing low. So what does that mean for the total market cap? Well, the total market cap, if the dollar continues to go up, will most likely tag the support line over here. So that's Bitcoin, ETH, and all the altcoins. That means your target is coming in at 1.018 trillion, right onto that trend line. That would be a good area where you could potentially get a bounce. Total 2, remember, it did tag into the level exact. It has yet to break that zone down. So until such time as it breaks it down, we'll continue to treat this as support. And that is in line with what 𝗕𝗏𝗄 says over there. You can see the ETH BTC chart is continuing to grind up. And this minus, this is the total 2, right? So it's the market cap excluding Bitcoin, and it's looking healthier than total. So watch that over the coming days. Let's see if it starts to form the third higher low over here. If it does, then we could get a bit of a rally. At that point, I expect the DXY to break down. All right, Kevin Svensson also outlines over here potential bullish divergence, which is happening between the MACD histogram over here. So you can see it increasing up. You have the EMAs as well, which are starting to cross up and targeting towards the zero line. And then you have Bitcoin price, which has been obviously making lower lows in line with that, which signals the bullish divergence. So that could potentially be something that might play out. And if you line that up with this price chart over here, that lines up with maybe you get your third drive of bullish divergence. So what would that look like? If that MACD continues to trend on up and you have your one touch over here, your second touch, and if price could potentially come down into that 200 EMA over there to create the third touch. Then you have 3 potential drives of bullish divergence, which 3 is always much stronger than 2. And then you can start to look at this and remember as a over here bull flag formation with your third touch, third bullish drive confirmed, and then that can potentially shoot on up higher. But for the time being, it is still in the short to medium term pressure down. Why is that? Well, firstly, you've again lost the pivot level on Bitcoin. Your pivot level is coming in today, and this level changes every day, which is why you have to watch the show every day so I can update you. Your pivot level today is at $26,818. Price is below that. Price came up into the EMAs over here. You can see a hard rejection over there from the 24 EMA. This yellow one is the 12, and consequently price has started to come down, and you're targeting towards the 200 EMA, which is the light blue one. Next, what about Ethereum? Exactly the same picture over here. The only difference is Ethereum is still holding the pivot level. The pivot level is coming in at $1,816, but it's rejected. It's deviated above. You can see above the EMAs, and then consequently, since then, it's lost that level. So we'll keep an eye out on Ethereum. Ethereum's still looking a little bit better than Bitcoin. Next, there is potential narrative which is building over here. That's the tokens which you can trade for the Hong Kong narrative. So as TED Talk says over here, he's included in at least, or it's been included in at least 2 acceptable investable indexes from independent providers, one with experience in TradeFi sector. Retail investors can trade larger tokens, which is going to be from June the 1st, which happens in a couple of days time. So this is all around Hong Kong legalizing crypto, and these are the coins, right? So I've outlined these coins. We can go through them. So you got the big hitters, right? Bitcoin, ETH, Solana. Then you got some of the other ones: Filecoin, Bitcoin Cash, Atom, MATIC, BNB, Litecoin, Chainlink, AVAX, Cardano, and Polkadot. These are the coins that they're going to be eligible to trade via certain indexes. And I thought, let's have a look at the price levels. So we've covered Bitcoin already. That's done. We've covered ETH. Let's go on to Solana. Now, I want you to focus on the moving average over here. So this is the 200 daily moving average. Now, typically you want to see these coins above their 200-day moving average to say that it's probably going to have a little bit of upside momentum. And is this one above its 200-day moving average? It is, but it's not looking that great. I mean, you can see the 200-day moving average is down sloping, and price is moving down with it. Now, your best case scenario over here is that whole bump and run scenario whereby you have price move up. So bump goes up, and then you're looking forward to bump and run out of that level. So that is something to keep an eye on, but it's coming into the mid-range over here. So here's your mid-range on Solana. And if it starts to lose that 200-day moving average, all you need to do, put on your chart on Solana, 200-day moving average currently sitting at $19.22. If it starts to lose that level, I would say that it's going to revisit all the way back down to the bottom of the range around that $16 level. If you start to see it bounce from here, and the way that I would trade it is I would rather wait for a daily reaction off of this zone. I'd rather wait for price to push off of this level, something like this. So if you start to see it move up like that and come back down, then you can start to form a trade setup with your stop underneath that level, saying that this is the low that needs to hold over here, and you're looking for price to continue on up. That is on Solana. Let's go into Filecoin. While that loads, let me know in the comments, are you present? Also smash the like button, help to get the video content out there. We have been away in Miami for a couple of days, and consequently a lot of people don't know that we're back. Please make sure you take a second out of your day to smash the like buttons, and then let me know if you're here. I see we got Lily V, we got Grandiose, we got Teddy Bear, Salou, we got Alex, we got Brian Soul, SK, we have BG. I see that we have Ryan, Brandon. Welcome, guys. Thank you so much for joining. Smash the like button over there, and then let's quickly look at the rest of the coins. So here's Filecoin. Remember, Filecoin was really hot and happening not so long ago. Had a big pump up in February, which was also based off of that whole China narrative, and consequently, it's given up the majority of these gains. So you can see the range that it's within over here. This was the main range low. We had the deviation. So you looked at this level as a deviation. Let's quickly draw it in for you. Deviation, back into the range over there, and consequently price has come back down below that level once again. So what am I saying over here? Remember, the 200-day moving average is an important one. And if you were to see price deviate once again, so you had this deviation back into the range, watch for potential deviation over here whereby it reclaims that 200-day moving average. If it does that, that would be your trigger to go long with your stop below, because not only has it recovered that 200-day moving average, Filecoin at that point would then also be breaking back into the main range. If it doesn't do that and it continues to hold under here, watch when it pushes into this. If it rejects, very, very bearish. You can target all the way back down to the bottom of the range, coming at $2.50. So that's Filecoin. Atom. Let's look at Atom. Atom at one point was holding this trend line. Quite bearish that it broke it down. The supporting trend line has been lost. Price is also stuck below the 200-day moving average. So, you know, that's obviously not a good thing. Watch again to see it if it can reclaim it. If it starts to reject off that level, you can expect it's probably going to bleed down a lot lower. There are some of them that line up for potential long trades. The ones that are below the 200-day moving average are not the ones that you should be focused on. Okay, MATIC. So MATIC over here, same thing. You can see it below the 200-day moving average. Not a good sign. Watch for the bounce into here and a rejection off that 200-day moving average, as well as into this range over here at $1. Call it pretty much the $1 mark. If it fails that level, it's going much, much lower in my opinion. BNB. BNB is one of them that's actually holding the 200-day moving average. So you can see it is starting to react off of that level. You have a couple of tests over here. Support, bounces, deviates, comes back up. Test it again as support. If it comes back into this level again, it could potentially be a long play. Litecoin. We know the Litecoin halving cycle happens before Bitcoin. So this is one of the ones that are pretty interesting. Let's just quickly zoom out to show you a little bit of perspective. It's really been operating within a massive range for its entire life cycle. So you can imagine this mid-range level. Where's that coming in? At 103 is going to be a very, very strong resistance zone to get through. But the good thing is that it has reclaimed the 200-day moving average, which is slowly but surely moving on up. So put in a simple trend line over here. You got your first touch, bounces off. Second touch, bounces off. Third touch. Now you want to see what happens next. If it comes into the 200-day moving average and holds, that could be an opportunity to go long. Otherwise, wait for it to potentially come into the trend line yet again. And then that reclaim, you can buy it into that trend, into the 200 EMA, or excuse me, 200 MA. Stop goes below here, and then you're just waiting for it to eventually break above this 100 mark. 100 level is a big resistance. If it gets above that, then it's going to really open up all the way to about 150, which gives you about a 50% move from here. All right, next, Chainlink. Chainlink, one of my long-time favorite coins, which pretty much did nothing for ages, has been stuck in a massive range for a super long time. I think out of all the charts, there is no cleaner range than this. It's very simple. Every time that Chainlink comes back into this range over here, to give you the precise level, anything around that $5.40 is a potential buy zone. But you have to be very careful, because in a capitulatory environment, if Bitcoin does start to make new lows and you see some sort of capitulation, there's a high probability that it will wipe all of these guys out, and then the swing failure pattern and reclaim back into the range would be where you would enter over there. So for the time being, you're only a couple of percent away. Let's see percentage wise, from there to there, you're about 13% away from where over the prior year has proved to be a very good accumulation zone. Remember, if you're just playing at level to level and you buy that level, from there, from bottom to top, has been a 72% move. So you can imagine if you were trading this, longing to the top, shorting all the way back to the bottom, what sort of gains you could potentially make off of that. So keep an eye on that. That's Chainlink. Put it on your watch list. AVAX. Okay. AVAX is not looking too hot in the sense that it's now revisiting this level once again. But similar to Filecoin, you'll be looking for a potential second deviation. So have a look at that. Also, clearly defined range. big deviation over here, big scare within the markets, reclaim that level once it did. You had a big move all the way back up to the top. And could this time be different, or is it going to be exactly the same thing? Well, watch for that. If you do see let's quickly grab the pen. If you do see price hold this level, it might swing fail down. Call it a deviation, swing failure, whatever you want. Once it's back into the range at the same price that it's at now, $14.37, stop goes below there, and then you can target towards mid-range, and then after that towards the range high. Let me show you what that would look like as a percentage play as well. So from this level to mid-range, you're looking at 22%. To the top of the range of there, you're looking at about 47% move. So hopefully the Hong Kong narrative does play out. Hopefully it adds some buying pressure, and we have some very easy trades which are on the charts over here that we can potentially look at over the coming weeks. Okay, next, Polkadot over here. Same thing as AVAX, same thing as Filecoin. You're looking at potential deviation like that. So if you see price come down again, watch for the reclaim. That is your long opportunity. Stop goes below wherever the swing low was. And same thing, target towards the mid-range, target towards the range high. Percentage-wise, what are you looking at? Pretty similar to the rest, I would say. 23% over there. And then from bottom to top, you're looking at about a 42% move. So not too bad. Cardano. Remember, all the coins I'm showing you here, guys, are all based around the Hong Kong narrative. Just a quick reminder, Hong Kong have made trading crypto, at least the large caps, legal again. And these are going to be the ones that are going to be featured in some of their trading indexes. So an index fund whereby somebody can just buy basically, they put money into an index, a basket of different coins. These are the coins that are going to form part of that basket, which might add new buying pressure that we haven't seen for a long, long time. Cool. Cardano. Here you have Cardano broken below this very, very key level at 42 cents. And you have an interesting zone coming in at 31 cents. At the moment, Cardano is in the middle of no man's land. All I would do is I'll just mark off this level, 31 cents. If you see price come back into that zone, that could be an area where you could potentially get long. Otherwise, also watch the 200-day moving average. If it does continue to hold that, you'd want to see it consolidate though. You need to see it consolidate over here, giving the 200-day moving average a chance to start to roll on up. Remember, when you are trading these things for healthier longs, it's better when the 200-day moving average is angled upwards, especially the more aggressive it starts to move up, the more powerful the move will become and the stronger the trend, right? At the moment, it's kind of flatlined to slightly down, which indicates that you can expect chop and a consolidative environment. Okay, Bitcoin Cash. Let's look at Bitcoin Cash. So Bitcoin Cash below its 200-day moving average, but you can see the aggressive downtrend has started to slow down and it started to move sideways. Again, what I just said, my expectation then would be that you can expect this is most likely going to continue to range for quite some time. If it does range, any test into the bottom of that range around $95. So if it comes down into the $95 region, that is your opportunity to go long, and you're longing same thing as the rest to the top of the range. What would that look like percentage-wise? Same as the rest. Also, between 45 and 55% move if it does play out. Okay, Bitcoin Cash was the last one on that list. So I'm going to leave it at that for the altcoins, and let's move on. Another interesting thing, if you go watch the most recent video that's been put up on the Banter page over there, I think it's called War on Bitcoin. It basically covers what happened at the conference and all the bullish things that are taking place on Bitcoin. One of which, if you look over here from Zach, he says Bitcoin now ranks as second on the leaderboard for 24-hour NFT sale volume per blockchain, which is pretty big. Who would have ever thought, if you told them even 6 months ago, that Bitcoin would be one of the biggest NFT platforms out there as per volume? You wouldn't believe it, but here it is, Bitcoin number 2 after ETH. Pretty good. Next, I want to look at Bitcoin on the low time frame. So the 4-hour and the hourly chart, and then we'll look also at the liquidation levels. So this is kind of what we're viewing over here. It's coming into the range low. We're still waiting for potential SR flip, so a proper tag of that prior range high. I would love to see this work as a range. So continue to hold as a range and look for a deviation, this being the range. and then looking for potential deviation, with that deviation tagging the prior range high. So holding that level, coming back in, swing failure pattern, and a potential long. For the time being, risk does remain to the downside, and the reason why is, of course, we once again have rejected off of this death cross that's taken place. So death cross over here took place over there, lost the 50 EMA, again, lost the 50 EMA, lost the 50 EMA, lost the 50 EMA. This one was a bigger bull trap, came towards the 200 EMA, and once again lost that level. So the trend is clearly towards the downside on the 4-hour chart, and I would continue to treat it that way. If the 4-hour chart does start to break structure and flip into an uptrend, I will consider getting long, but until then, this is the lowest time frame that I'll focus on, at least for my edge on a swing trading basis, which means expect potential low prices towards that prior range low or the prior range high, which will now hopefully flip as support. So let me zoom out to show you what I mean. Okay, you guys remember this was the level. Let's just let it load up. Okay, there we have it. So remember, this was the prior range. That being the prior range high, we took a long time to break out of that level, and eventually we're going to come back and retest that zone. So your first level of interest is 25,300. If you do start to lose that level, you can look towards this diagonal. The diagonal also lines up with the 200 EMA, which is going to be coming in around that $23,000 level. So 25 first, lose that, and then you're looking at 23. I would definitely attempt a bid into this diagonal trend line over here, by the way. So if we do see price come into that zone, 100%, that is an area to potentially take a bid. If you lose that, well, then you're going much, much lower, all the way back into the range, and your range lows around that $21,000, $22,000 level become a possibility. Okay, let's look at the different flows over here that's taking place with the leverage traders and the way that the funding is stacked. So funding went positive yesterday. Recently, it's just flipped negative. I would expect this to still build up a little bit more momentum towards the downside. But ultimately, where do the leverage traders lie? So where are their stops placed? So the biggest one, liquidation level, is going to be at $27,350. You can see you've already grabbed most of the liquidity over here. Look at how price came into that. But as price starts to move up and capture this, these bottom levels are going to start to brighten up. Liquidity is going to start to build up around that $26,000 level. So not much has changed based off of yesterday. The main elephant in the room is still that $27,300 level. That is where the primary liquidity is, $27,300. So what does that mean? On a very short time frame on the hourly chart, that means that you could potentially look at this to be the next low, right? Or the next higher low at least. So what are we looking at over here? You're looking at, you can see the wicks. We got a simple trend line over there. Simple trend line. You also have your prior range low. Watch for a potential bounce from this zone, and then a move up towards that 27,300. Capture some of that liquidity, and then basically you can get out of that position really, really quick. So it would look something like this. Let's quickly grab our tool, long position. So if price can hold this level over here, I would stop out under the range low, and you're targeting towards the liquidity at about 27.3. That's kind of your trade. So basically it's a 1 to 2.18. I typically don't take these types of trades. I prefer 1 to 3 or more. So maybe if you wait for a retest into that region, you'll get a better risk to reward ratio. But looking at something kind of like that, that basically brings us to the end, guys. Make sure that you check out the competition. There are still a couple of days left. You can win a Tesla or $40,000 in first place prize, Rolex or $20,000 second place prize, and third place is a $10,000 cash prize. Everything is in the description below for you to sign up. Click on ByBit over here to my link below. Sign up. You get up to $30,000 in sign-up bonuses, and then you can join the trading competition. It is great practice. That's it from me. I will catch you all on the next video. I appreciate each and every one of you. Smash the like button, subscribe to the channel, and I'll see you all tomorrow. Cheers for now.